Welcome back to the Value Investors Club. I'm your host, Immer Wunderlich. Let's get right into it with VIC readings, the format where we look at the best of the best. Value investment recommendations by the best of the best value investors out there. Today we have DentalCorp Holdings LTD, ticker is DNTL. Price at the point of filing, $8.58. This is not a recommendation, not advice. Please do your own diligence before investing into anything. Let's get right into it. Please leave down in the comments below if you have invested, will invest, or why not into DentalCorp, or why you did. Description: DentalCorp owns and operates over 530 dental practices across Canada. This business was founded in 2011 by Graham Rosenberg, a partner at ClearVest, a well-regarded Canadian private equity firm. Since its inception, DentalCorp has built an impressive track record by focusing on acquiring mature dental practices with established books of businesses, all while allowing selling dentists to maintain clinical autonomy. As a result, DentalCorp has become the clear acquirer of choice amongst Canadian dentists. Today, DentalCorp is the largest owner of dental clinics in Canada. Despite DentalCorp's success in completing acquisitions, the Canadian dental landscape remains highly fragmented, with over 15,000 independent dental practices in Canada. Not satisfied with DentalCorp's growth, Graham and the current sponsor consortium look to further accelerate DentalCorp's acquisition pace by taking advantage of the strong 2021 public markets to utilize a public share price to assist with financing acquisitions. In May 2021, DentalCorp successfully raised 950 Canadian dollars in an all-primary IPO, in which the current sponsor iteration participated. DentalCorp's initial 2021 debut in public markets was a success, with shares trading above IPO price all throughout the year. Unfortunately, in 2022, DentalCorp's public market performance could not be any stronger. The combination of a majority-controlled share class, low-float levered business with a mixed public earnings performance has sent DentalCorp into orphan status. DentalCorp shares have effectively traded straight down all year, declining nearly 65% on a peak to through basis, and today are down 50% year to date. DentalCorp shares are currently trading for $8.50, with enough volume for the average fund on VIC. The most crucial point to emphasize, and the crux of the thesis, is just this past week on November 21, 2022, DentalCorp announced the commencement of a strategic review process to unlock shareholder value. The press release can be found here. At Business Wire, DentalCorp announces commencement of strategic review process to unlock shareholder value. I believe this is a real strategic review that will result in an outright sale. Specifically, there are 3 points in the press release that is worth focusing on. Number one, the founder, CEO, has explicitly said that they have received offers for the business. Our management team is fully aligned with the board's decision to explore options to maximize shareholder value, including in response to unsolicited expressions of interest that have been received. Number two, the special committee is comprised of purely independent directors. Catterton and Graham Rosenberg are the only non-independents on the board. L. Catterton owns 40% of outstanding shares and has 28% of votes. Graham owns 5%, and through a dual share class structure, controls 35% of votes. It's incredibly peculiar that L. Catterton has 2 board members and is not party to the committee. I suspect Al Catterton is one of the unsolicited expressions of interest. 3. Three investment banks are acting as financial advisors to the special committee. Jefferies the lead given their healthcare sponsor relationships. TD and CIBC lead the credit. This deal will likely be financed in the bank market as the public markets are a bit more difficult. The Canadian banks love this credit and have seen it levered as 7x in the past. Financing advisors would not be involved in the strategic review if this was just a kicking the tires exercise. So bringing this all together, I believe there's a very high probability this is sold in relatively short order given Al Catterson's role position. I think we will get at least $11 per share, which I estimate is Al Catterson's cost base for this business. And I think a sophisticated buyer can rationalize a bit in the $12 to $13 area. If I'm wrong, I believe the current $8.50 share price represents a good value for this incredibly defensive business, providing for an asymmetric investment opportunity. To frame this opportunity with some more numbers, at $8.50 per share, I see the business trading for an 8% unlevered pre tax yield. This is a business that year in and year out should grow at least in line with inflation. Even assuming no operating leverage, that gets us to a real 8% unlevered pre tax yield. I see this being close to the through for a highly defensive, large, stable business. Conversely, recent private transactions precedents in the current market suggest valuations above 15x EBITDA. This implies a share price above $12. Therefore, I see upside here of 40%, while the downside should be minimal given the strong valuation support. What exactly does DentalCorp do and how does it make money? DentalCorp acquires established Canadian dental clinics. Its main value proposition is that it allows dentists to crystallize the equity they have built in the business while allowing dentists to maintain clinical autonomy. DentalCorp provides administrative support and operational best practices to newly acquired clinics, albeit the overall profitability improvement is somewhat limited. For context, I estimate DentalCorp improves like for like practice margins by 200 basis points. Therefore, I don't want to give you the impression that this is some highly scale advantage roll up, which is able to drive significant synergies upon acquisitions. Rather, the success of this roll up is largely financial. DentalCorp needs to find the right dentist who has built a successful practice and wants to focus on being a professional dentist instead of a business operator. Once a DentalCorp identified these practices, um, it can't pay too much. Individual dental clinic acquisitions have been in the 6 to 8x EBITDA area, which equates to a stabilized 11 to 15% pre tax unlevered yield. After a clinic is acquired, the dentists stay on for at least 5 years. Dentists are solely commission based, paid on billable hours. Aside from rents, the costs within a dental practice are largely variable, with the largest comp line item being dental commissions. Dental Corp has been acquiring clinics for over 10 years, and nearly half of its practices are now 5 plus years old. So far, the cohort renewal data looks incredibly strong in the 95% plus range. The average dentist age at the time of acquisition is 47 years old. Most dentists renew after their original contract before retiring, meaning the Dental Corp expects most dentists to serve for 10 years under Dental Corp ownership. Is this a good or a bad business? While the value of having a scaled dental clinic roll up can be debated, I believe an individual dental practice is an attractive business with predictable, highly recurring, recession resilient cash flows. This holds particularly true for Canadian dental practices. The Canadian dental industry is primarily private cash pay, where the patient must pay the provider at the time of service. If the patient has dental benefits or insurance, the patient is responsible for submitting the claim to their private benefits or insurance provider for reimbursement. The approach differs from other healthcare services sectors across North America, where the economic relationships and burden of seeking reimbursement from an insurance company or government payers typically falls on the healthcare provider. This dynamic results in Canadian dental providers having limited exposure to insurance companies, government payment delays, and limited days of accounts outstanding. For example, dentists in the United States receive co-pays from patients at the point of service and then are required to submit claims directly to the insurance companies. 75% of Canadians have dental benefits from their employer. Effectively, this means their employers pays the dentist at the time of service. In turn, 75% of Canadians see a dentist annually, utilizing their benefits. Per capita dental service expenditures in Canada have grown consistently for nearly 50 years, and Canada is the fastest growing G7 population, entirely immigration driven. Similarly, dental service pricing has historically increased above inflation during almost any inflationary period. See this supporting data in slide 9 from DentalCorp's most recent investor presentation. What is the business worth? As of Q3 2022, net debt outstanding is 923 million. Using an $8 share price as assumed in Q3 2022 financials, the fully diluted stock outstanding is 185.2 million. At the current $8.50 share price, I see Dental Corp trading for an enterprise value of 2.5 billion. Current EBITDA Current EBITDA after lease expenses for Dental Corp's 538 dental practices is 213 million. Therefore, Dental Corp is trading for less than 12x EBITDA. Dental Corp estimates a maintenance capex of $30,000 per clinic, and this estimate appears in line with my checks. This means EBITDA capex is approximately 195 million, implying Dental Corp is trading for less than 13x EV per EBITDA capex. This 8% pre-tax yield is an attractive valuation for a collection of dental clinics across Canada, which should grow in any economic environment and deliver unlevered earnings growth at least in line with inflation. Many sell-side analysts point to other acquisitive healthcare companies as comparables to Dental Corp. I don't place much value on these relative valuations given how different the business models are, e.g., Surgery Partners, National Vision, etc. So, the discount Dental Corp is currently trading to these names is sizable, 3 to 8 EBITDA turns, and worth noting. However, what intrigues me most about the Dental Corp situation is the large private transactions for Dental Corp networks that have been completed. Most notably, the 123 dentist slash Ultima dental transaction merged the number 2 and number 3 dental players in Canada. The deal was completed in July 2022, so this transaction was in a similar market backdrop to today. While full transactions details are not public, from my understanding, this deal at was done at 17x EBITDA, with leverage in the 8x area. The transaction was backed by notable PE investors such as KKR, Peloton Capital Management, and Sentinel Capital Partners. In addition, a strategic partner, Heartland Dental, was involved in the transaction. Heartland is the largest U.S. dental roll-up. Over $1 billion in actual cash changed hands during this transaction. So this is a real mark. Dental Corp at the same valuation implies a plus and a above $14 share price or 70% upside from today. Other notable private transactions include U.S. Oral Surgery Management, which was for $750 million done in the 15x EBITDA area. In addition, Berkshire Partners Affordable Care was valued at 2.7 billion US dollars, implying a 17x EBITDA multiple. These multiples not only support a high dental corp valuation, but I believe the Canadian dental market is more attractive than the US market for the reasons mentioned above. Who is Al Catterton? While I could go on painting why I think Dental Corp is undervalued, I think one of the most important points to the situation is an appreciation for just how much Al Catterton wants this asset. I'm sure most people on VIC have heard of Al Catterton. But for those unaware, Al Catterton is the largest consumer dedicated private equity firm in the world, with 30 billion in AUM, in assets under management. The L in Al Catterton stems from a relationship with the well-regarded Catterton private equity firm formed with LVMH's Bernard Arnold in 2016. Needless to say, this is not a firm worried about current financing conditions. Al Catterton got involved with a Dental Corp in 2008 and currently owns 39.7% of shares outstanding. Despite awe-inspiring operating results over this nearly 5-year period, I estimate Al Catterton is currently underwater on its shares. Based on the current business equity value at the time of their investment, combined with data points from certain option strikes, I estimate Al Catterton's cost base is around $11 per share. Most recently, Al Catterton participated in the IPO at $14 per share, and there's only been one minor dividend recap since their ownership. There have been 6 quarters of results since DentalCorp has gone public. The results have been mixed versus expectations, but more or less in the right ballpark. The important takeaway is nothing points to a business that is fundamentally impaired here. What's obvious, however, is that there's no point in a dental corp being public. The purpose of the IPO was to give Dental Corp a public currency it could use to consolidate the market faster. In exchange, it would have to operate the business with certain public market constraints, like leverage being below 4.5x versus 8x when it was private. Now, Dental Corp is completely stuck as it can't operate with more leverage in the public markets, while its equity value is trading below a level I think anyone involved in the situation could imagine. Thus, a value disconnect is giving a well-capitalized firm like Catterton a shot to take back in the business that has more than doubled under their ownership. For the same evaluation they initially got involved in, all my checks indicate that Alcatel is aggressively looking to deploy capital in the current market. In turn, I believe Alcatel is the catalyst behind this strategic review and can easily rationalize a bid to take out the minority public shareholders at $11 per share. Recent transaction precedents point to value of more than $12 per share. At the current $8.50 per share, I see substantial valuation support, driving my view that Dental Corp is a highly asymmetric situation. Catalyst acquired. Please write down in the comments below what you think of this of Dental Corp, and if you would invest into it. I think it's an interesting write up here on VIC. Um, but I like to go longer. I'm not sure about the company. I think I will read more about it. I like to hold longer for the longer term. So 8%. I don't know if that is enough for me when I don't go into it for the for the takeover, for the buyout, for the merger, because that's not my strategy. Let's see. I will read up more. Please write down what you think about it. It would actually really interest me. See you next time.